In the last few weeks, Nordstrom's stock price has almost doubled. Is there still room to get in? Is it too late? Today we're going to take a look at Nordstrom. Welcome back to the channel, family. My name is Trey, getting in touch with you from Japan. On this channel, we take a look at stocks and investing. And recently, I just moved a bunch of my footage to its separate channel where we're talking about entrepreneurship, personal growth. I'm doing a series on how we took $200 and turned it into $1 million with small business here in Japan. So if you're interested in that, please click up here to go check out that channel as well. I also wanted to mention that we just started a partnership with Webull. Webull is a very convenient investing app. I've been using them for more than a year now, and interestingly, they just started to offer crypto as well, which is really cool. If you use that link down below and sign up with $100 or more, you can get 4 free stocks valued up to $3,700. So please hit that link down below if you're interested in starting a new brokerage account. So jumping back into Nordstrom, take a look at the 1-month stock price chart here. We're up big time since the last video about a month ago. So if you bought in like I recommended, you're probably pretty happy with yourself. But just for some perspective, let's take a step backwards and look at the 5-year chart here. It's important to remember Nordstrom's history. Going back even just a couple of years, they were as high as 68, 69 bucks. So even though we've seen big gains recently, we still have a ways to go if the stock is to return to its former glory. My personal cost basis is about 14 bucks, so I'm up about 200% on the stock. Right now we're sitting at just below 28 bucks. So before we take a look at the third quarter financials, let's take a second to review kind of what makes Nordstrom awesome, who they are, and their market position and things like that. If you want an even more in-depth look, take a look at the video I made that's more comprehensive a few weeks ago up here. Nordstrom and its discounted version Nordstrom Rack have around 350 stores. They've shut down a few stores this year, obviously due to the pandemic, and they've been in business for more than 100 years. Their claim to fame is their exceptional customer service that seems to just get customers extremely loyal and just coming back for years and years and years. Nordstrom Rack, the discounted version, tends to target a slightly younger demographic, but a large percentage of loyal Nordstrom customers end up graduating, so to speak, from Nordstrom Rack and continuing on into Nordstrom. One of the big fears this year as the pandemic wore on was that malls would be shutting down and retailers would be going bankrupt. And indeed, many of Nordstrom's competitors ended up hitting bankruptcy or really big financial difficulties. But Nordstrom is really well known for operating only in Class A malls, which are known to be kind of like the premium malls and generally target a more wealthy clientele. Almost none of these Class A malls are under threat from shutting down or being like largely restructured. And so Nordstrom has fared relatively well compared to a lot of their competition. Another little known fact about Nordstrom is just how loyal their shoppers are. Making up about 2/3 of company sales every year, the Loyalty Club has more than 13 million members. We've seen the percentage of Loyalty Club members continue to climb in recent years, and I think this demographic makes up the core of Nordstrom's strength. We've also seen a really well executed shift to online retail since, you guessed it, 1998. While a lot of the competition struggled to set up like a proper online presence this year, Nordstrom actually started in 1998, and they're one of the biggest online retailers even now. And they were doing like online returns and free shipping way before Amazon was even a thing, actually. Online sales made up 54% of total company sales at $1.6 billion for the quarter. And so this goes to further strengthen their position against declining malls or declining retail. Basically, it goes to show that a huge percentage of their sales are happening online. And one of the neat things that they're offering is in-store pickup or shipping from the local store to the customer, which gets the product there much faster than shipping from a big distribution center somewhere else in the country. In 2019, online sales made up $4.9 billion in sales, making Nordstrom one of the largest retailers in the US, like in the whole country, not just, like nice store sales or something like that, like everything online. Taking a look at this quarter's earnings, we see positive earnings and strong cash flows, which ended up beating expectations big time. Check it out. They showed more than $100 million in EBIT in the third quarter of positive earnings. And then they also showed $150 million plus in operating cash flows too. This led to a GAAP EPS of 34 cents for the quarter, which demolished expectations. They put together a handy chart with some of the vitals for the quarter, comparing the most recent quarters as well. Take a look at the very bottom of the chart, there's a little star there, and it says, includes the impact of anniversary sales shift from quarter 2 to quarter 3. So Nordstrom's really well known for their huge anniversary sale, and because so many stores were closed during the second quarter, they just shifted it to quarter 3. Another note, if you've never taken accounting before, is that parentheses around a number means minus, means a negative. They don't really use negatives like on big charts because it'll be easy to miss. So if you put a parentheses around it, that's minus. So looking back at this chart, quarter 3 is down 16% sales compared to last year's quarter 3. Comparing quarter 1 and quarter 2, which were down like half, this shows that we're kind of stepping things back up a lot. But keep in mind that the anniversary sale was shifted to this quarter, which boosted that by 10%. EBIT, earnings before income and taxes, was also positive, which is great to see. Operating cash flow was also positive. Last quarter it was as well, but we'll see actually how that impacts a bunch of other things here in a minute, which is really, really good to see. Total liquidity is also up from last quarter, and again, I'll get to that in a minute too. Moving on to the next chart here. All these numbers worked out to an only slightly lower gross profit rate as a percentage of sales for this quarter compared to last year, down only 150 basis points, which is 1.5%. They also noted that sales, general, and administrative expenses as a percentage of sales is down compared to last year too. So one of the reasons when we zoom back out and look at the stock price chart in March when things fell apart, one of the reasons for that huge price drop was that everybody was afraid that malls were going to shut down and big retailers were going to go bankrupt, basically. And so we saw this huge drop, and a lot of people were looking at the Nordstrom stock being like, oh yeah, look how much it's dropped. Obviously they're going to go bankrupt, which is kind of putting the chicken before the egg kind of thing. So looking at these numbers, we see that even though the vaccine isn't here yet, sales are picking up in the third quarter. We don't really know how things are going to be going in the fourth quarter with potentially, pandemic numbers picking back up again. But with the apparent vaccine on the horizon, I think it's safe to say that we're going to make it through. And I think if we do, then we'll start to see the stock price gliding back up smoothly again going into the future here. In the third quarter report, Nordstrom also mentioned that their online shopping experience improvements have been successful and fruitful. Adding more than 30,000 customer choices to their selection has boosted appeal. And more than 10% of online orders were picked up at rack stores. And roughly 25% of online orders were fulfilled at stores. So we're starting to see this kind of neat synergy where, yeah, online sales is making up a bigger portion of revenues, but they're also not just forgetting about the stores and the shops that are local for people. They're using those as launching off points for shipping or also for pickup points for people who want the item quicker. They also mentioned in the report that they're starting to focus more on their largest, biggest, most solid markets. And they're offering a bigger selection there, but they're also capitalizing on selling online or selling through stores online. And that's lowering the inefficiencies that you normally have to deal with when you have a completely separate store and a completely separate online kind of e-commerce thing going on. It gets really, really tricky to manage inventories when those are all completely separate. But it seems like Nordstrom has done a really good job of putting those together and capitalizing on it to boost efficiency. I'm pretty sure a lot of their competition are pretty jealous of the way that they've executed on this. The anniversary sale that I mentioned a minute ago was also tremendously profitable. Speaking of loyalty, 80% of the anniversary sales were from their loyalty club called the Nordy Club. In the anniversary sale, 60% of the sales were digital, and a third of Nordstrom.com sales were fulfilled from stores for faster delivery. So in the last video, I mentioned that last quarter, they had a $500 million line of revolving credit, which is basically just imagine a credit card, but for a huge corporation kind of thing. They had $500 million in debt. I mentioned a minute ago that they had $155 million in operating cash flows this quarter, which gave them the ability to pay off 300 of that 500 in revolving line of credit. I think often revolving line of credit is one of the most expensive ways to get money into your pocket, but it's very useful to pay off high expense debts or to be able to stay afloat and keep things running well. But the fact that they were able to pay off 3 of that 5 is really helpful and also shows that management is aggressive about savings and also aggressive about paying off debt so that they can become even more profitable going into the future here. So they ended the third quarter with $1.5 billion in liquidity, including $900 million of cash. That's a really good sign, and that shows that I think we're pretty much out of the woods as far as the threat of bankruptcy goes. Taking a quick look at current liabilities, comparing this quarter to last quarter, it jumped up a good bit from $3.642 billion to $4.394 billion. But the vast majority of that is made up of about $700 million in accounts payable. Usually the way it works in retail is when, let's say, a shoe company sends Nordstrom $100 million worth of shoes that they distribute around the country to all their stores, Nordstrom doesn't just give them a bunch of cash to buy those shoes immediately. Usually the way it works is they'll say, hey, we'll pay you back within 90 days. And so that becomes an accounts payable. It's like an IOU. So we've seen that go up a lot in the last quarter, which isn't necessarily a bad thing. It's not necessarily like, oh no, this is danger. It could also just be a sign that they're starting to sell quicker, so they need to start loading the shelves again and preparing for increased sales going forward into the future. So this is not a red flag for me at all. So, what do you think about Nordstrom right now? Do you think we made the right call? I think this quarterly report has strongly confirmed our suspicions and our expectations. I think, in my opinion, we're probably pretty close to safe from the bankruptcy threat. We're seeing all kinds of good signs in terms of growth, in terms of paying off debt, in terms of growing savings, in terms of stronger, sharper offerings, and increasing loyalty as well. When you pair that with the hopeful expectation of a vaccine on the horizon, we're probably not that far away from the stock price going up even more. I think a lot of people look at Nordstrom and they're like, oh man, it's doubled in the last 3-4 weeks. It's stupid to get in now. But in my opinion, that's not necessarily the case. Keep in mind, my mode of investing is to think of stocks as ownership, long-term ownership. So whenever I invest in companies, I'm thinking I want to be an owner. I want to be invested in this company for the long term. I very rarely am just chasing the trendy, sexy stock, the Reddit meme stock to try and get a bunch of money now. My point of view is more like I'm going to be in this for a year, 2, 3, 4 years, maybe even longer, 10, 20 years. And I think we're going on the right track with Nordstrom. If you've seen your holdings double and you have a huge position, it's not necessarily a bad idea to take some profit. I can never get mad at you for taking profit. But if you're not even in Nordstrom yet, in my opinion, it's still kind of undervalued for what you're getting. I think there's still a lot of growth to be coming in the coming months and quarters and years if you're in it for that kind of time frame. So let me know what your thoughts are. Are you going to be buying more? Are you going to be selling? Are you going to be starting out with a new position in Nordstrom? What do you think? Looking forward to talking with you guys down in the comments section below. Thank you guys very much for all of your support. Have a great week and/or weekend. Love you guys. Talk to you soon.